Bundesbank warning about 6% inflation. Possible spike to those kinds of numbers would certainly have a big impact in Germany. Birgit, thank you very much indeed. Birgit Jennen joining us on the new coalition, the traffic light coalition. Never been tried before in Germany. We'll see how it goes. Let's talk about the implications of this. Bilal Hafeez, Macro Hive CEO, joining us now here on set. Bilal, good afternoon, first of all. Nice to see you in person.
Likewise.
Fantastic to see you in person. Talk to me about what that coalition means. It's at the heart of the European project. It's going to have a huge and outsized influence on what happens in policy going forward in terms of Europe's spending plans, its ability to manage the COVID crisis, and what happens with inflation. What are you looking at? What are the subtleties that you're looking at within this coalition?
Well, I think for me there's about 3 or 4 different things that are important about this coalition. Number one, on the fiscal side, many people were hoping that whatever the results of the election, there'll be a large fiscal stimulus from Germany. It doesn't look like that will be the case. It looks like with this coalition, they're going to try to retain the debt brake and be very careful on the fiscal side. So we're not going to get this fiscal stimulus, which I think in the end will be somewhat negative for European growth. The other one is on the climate change side. There is an agreement to have the energy transition in Germany, so that will be going ahead. The one wrinkle there, I should say, is that the Liberal Party will get the transport ministry. So it seems like one of the key sectors that could accelerate the transition of cars, at least, from petrol and diesel to electric won't be as fast as we thought. The third thing I think that is important is on the international relations side, where there's growing tensions between Germany, the US and Russia over the Nord Stream pipeline. Of course, we know the SPD is very close to Russia, but the Greens are less close, and they'll be at the center of the foreign ministry sort of side. So that's going to be important to watch as well.
Bilal, one thing I think that you brought up that is probably largely missed by the consensus right now is the international relations side. Because the euro has been dropping so quickly, you would expect the European economies to derive some benefit, considering how export sensitive many of them are. Yet, no one's really talking about what's happening with international growth and what's happening with China in particular. Talk to us a little bit about how this coalition may approach export relationships in addition to international relations, and specifically the export relationship between Europe and China, and even just Germany and China.
I think it's going to be very difficult. I mean, China is going through a slowdown at the moment, and while there have been some signs of a possible stimulus in China, I don't think it will be enough to really generate a huge amount of growth in China. Moreover, if you look at Chinese growth over the last 6 months to 12 months, most of it has come from Chinese exports rather than it being domestically driven, which means that China isn't really an engine for imports, which will drag exports from Europe into China. So I think that's a challenge for Europe. One is there enough demand in China to help the German export sector? Then on the geopolitical side, we know that the US is much more adversarial against China, and Europe is caught in between the two. So there's lots of delicacies for the Europeans to have to deal with here. And then the other issue is on the energy side, where Europe is facing high energy costs. Russia is a big supplier, but Russia has been diverting lots of gas towards China as well. So China comes back into the mix here, but instead of being a beneficiary for Europe, instead it's something that's negative for Europe on that front.
How far do you think Linda will go in terms of allowing a more relaxed approach to the Growth and Stability Pact in Europe?
My sense is I don't think he'll necessarily be that aggressive in relaxing the Stability and Growth Pact, ratios and targets. I think in general, Germany will be very cautious.
So he'll be aggressive about keeping it?
Yes, that's right. Yes, yeah. Let's be clear about that. Yeah. So the aggressive about keeping it. The broader issue is the longer the pandemic lasts, the more countries have the scope for using emergency measures that deviate from the fiscal rules. So there is that kind of get-out clause. Moreover, Germany in particular, while they will be sticking to their sort of debt brake rules, they could use off-balance sheet ways of trying to expand spending by sort of public-private partnership arrangements and such. So there's all sorts of ways you can get around the rules, but at least overtly they won't be advocating for that.
which could lead to some interesting relationships with the rest of Europe. We are seeing the delta, the rate of change, picking up dramatically in Europe. What is this going to translate into in terms of economic performance this winter? There was an expectation that we were going to continue to see recovery, that growth was going to continue to pick up, and now I'm starting to question that.
Absolutely, and I think euro area, unfortunately, is at the center of this again. So in terms of the things we were talking about earlier, energy shock, China, and so on, this adds to all of that. And I think what this, in the end, what it means is that we're likely to see a slowdown in growth. We'll see a hit to consumer sentiment, and this will sort of dampen economic activity. A key thing within all of this is what level of restrictions will all the key countries implement during this period. So we're seeing Germany's being more aggressive. Austria, of course, has been. France is probably a swing variable here as to whether they will do anything or not. But in general, whether it's more aggressive restrictions or whether it's voluntary reduction in people's mobility as they're fearful of COVID, all of these things will overall dampen economic activity.
And Bilal, how do you translate that economic activity into an investment strategy? Where do you see pockets of strength and weakness emerging into 2022 for the investor in equities, say? Are you thinking Germany would be weak, Spain would be strong? Where are you looking for strength and weakness to emerge?
I think on the equity side, I think in general we'd look for euro area equities to underperform during this period of time. When you have increasing COVID cases, that's typically the case. Of course, if COVID is the dominant factor, then you would expect Spain and the tourism-centric economies or markets to suffer more. So you would be more underweight Spain than anything else. But again, that also depends on the level of restrictions that we see. So Germany is more aggressive right now in terms of restrictions than Spain. So overall, my general bias would be to be underweight Eurozone equities, during this period.
What about the FX overlay on top of that? It's having a really meaningful impact in terms of performance so far this year. If you're a dollar investor investing in Europe, you've really lost out. Do you expect that to continue? We had a 111 today on euro dollar. Is that something that we can look into 2022 and think may extend?
Well, we've already seen quite a large move, in terms of peak to trough this year in euro dollar. So there's been a large move already. My sense is in the near term we could see further euro weakness. As to whether we'll see more pronounced euro weakness next year, whether we have a move to parity, that's harder to say, because we've already seen such a large move. So I'd be hesitant to make that call right now. But for sure, in the near term, I think there's more scope for euro weakness.
On that theme of euro weakness, Bilal, when you're looking at country-to-country exposure to the euro, clearly Germany is one of the areas that gets the greatest benefit from euro weakness, yet they're also an area that's contending with strong growth. How do you pair those off? Will you see growth, they're contending with strong inflation conditions. Will you see growth outweigh inflation or inflation outweigh growth in Europe in 2022?
Well, I think growth will be one of the dominant factors because, while German inflation is amongst the highest amongst the major economies in the Eurozone, across Europe as a whole, so the euro area inflation is on the lower side compared to at least the US. It's closer to sort of the 2 to 3% mark, whereas the US is in the 6% mark. And so in that sense, I think inflation, while it's a politically sensitive topic, will be less of an issue in the sense that it's unlikely to bring the ECB into the picture. The large issue, I think, will be growth, and that will be the bigger issue, and how to deal with the fallout from the pandemic related to that.
Do you think there is an argument that says that Eurozone inflation will actually pick up next year if we continue to, as you say, to see a weaker euro? Walk me through how a weakening currency is going to translate into maybe an inflationary impulse. I guess at a headline level, it's fairly straightforward, but if you get into the nuance kind of effects of it, as you say, you've got a growth story, you've got a weakening currency story. How does it all fit together, and what does that mean in terms of the trajectory for inflation?
Yeah, no, that's a good point. I would say that we have to understand the main driver of inflation in the Eurozone. At the moment, it's still largely related to commodities and traded goods. And the traded goods is related to more supply chain shocks rather than the currency. So for me, even if the currency is weakening, that won't necessarily add too much extra inflation. We're already seeing it from lots of other segments of the larger economy. So my sense is the currency side won't be the big driver of rising inflation next year. Instead, for me, the large swing variable here is whether oil goes to further highs, and that will really put the pressure on inflation for next year.
Can we zoom out of Europe and sort of focus on the broader global landscape? Where are you seeing opportunities emerge for faster growth, maybe peaking inflation? Talk beyond Europe for us so we can give a little bit of context for the global investor.
Sure. I think the way I'd look at things is that you have some parts of the world where you're seeing relatively strong near-term growth, at least, and fairly high inflation. So that's places like the US at the moment, Canada to some extent, New Zealand's another one. Then you have places like China and some of the Northern Asian economies where, strangely, you see relatively low and benign inflation, at least relative to history and compared to other countries. So they have less of an inflation issue and more of an issue around growth. So growth is a larger issue there. Then you have Europe and the Scandi economies that are suffering all of these negative forces, whether it's rising inflation pressures and growth and so on. So for me, there's three kind of blocks here. You have the US side, which is more reflationary, you could say. You have China, which is more of a slow down story, and Europe, which is caught between the two.
I suspect over Thanksgiving dinners there will be a lot of conversation about crypto. Anybody that follows you at the moment knows that this is an area you are pretty well focused on. Where are we? We're starting to see Ethereum dip down. We've seen some fairly aggressive price action over the last few days. Just give me an idea of what happens now.
Yeah, obviously crypto is a new asset class, and I think for me the most interesting observation I'd make about crypto, like things like Bitcoin and Ethereum over the last month or so, is their correlation to mainstream markets has really started to pick up. Mm-hmm. So that tells you that there's a lot of crossover traditional investors that have entered into the crypto market. So a few years ago the correlation was very, very low, but now the correlation's high, such that when the dollar is stronger, Bitcoin tends to be weaker, Ethereum tends to be weaker. When rates go up, when yields go up, crypto has tended to sell off. So in some ways, it's behaving more like a risk currency. So that's one observation I'd make about both Bitcoin and Ethereum. And then the other one I'd make is that long-term holders, so-called hodlers of Bitcoin and Ethereum are starting to sell at these highs as well.
Interesting stuff. Plenty of discussion over the Thanksgiving dinner table, I suspect. Bilal, very nice to see you. Thank you very much indeed. Bilal Hafeez of Macro Hive. This is Bloomberg.